Hi friends. In this video we are going to see what is meant by pump and dump and how it will put an innocent into a deep capital crisis. A pump and dump scheme occurs when high net worth persons artificially inflates the price of a particular stock. Once the price has risen, the person or group behind the cause rapidly sells their shares at a higher price and triggers a sharp price drop that can leave other investors, even to a verge of bankruptcy. How does a pump and dump scheme work? A pump and dump scheme begins when an investor or group loads up on shares of a particular stock. Most often, they target penny stocks or microcap stocks since it is relatively easy to influence the price of these stocks with only a small capital infusion from outside investors. The schemers then promote the stock that they own to other investors with the message that the stock is hot and about to take off in price. Traditionally, this promotion was done in so-called boiler rooms by brokers over the phone or by physical mailers, but now commonly takes the form of spam emails. If this promotion is successful, outside investors will also buy the stock, causing its price to rise rapidly based solely on demand, rather than solid business fundamentals. Once the stock price rises, the schemers sell their shares for a profit, in the process triggering a rapid drop in the stock price. In the Indian scenario, we have to look another way too. There are circuit breakers in stock exchange based on the stocks. If a company has a good value in the market, those tend to be at a high percentage. Say 20%. And those companies, which National Stock Exchange feels that the volatility may be high, the reduce this limits. An innocent investor who has entered into a trade on seeing the volumes and hikes, may be locked to trouble. In the rising case, he can only be in a position to sell. And in the falling scenario, he will be only in a position to buy those securities. This might result in erosion of his capital, even if he realized that he had entered in a wrong transaction in the midway, as at that movement he has no option to sell those and book part loss. Then how to spot a pump and dump scheme? Whenever you encounter a promotion that looks enticing, go beyond just the promotion itself. See if the same group has promoted other stocks in the recent past, and how those predictions have turned out. Research about the company yourself using technical indicators. If the company's business fundamentals show that it truly is undervalued, then you may be onto something. However, if the numbers indicate that the company is valued appropriately or even overvalued, then the promotion is likely false. The last thing to check is the volume chart for the stock in question. A hallmark of pump and dump schemes is that the trading volume for a stock will go from nearly zero to extremely high right at the start of the price rise. Although this can happen even when a pump and dump scheme is not underway, identifying this pattern adds more information for you to decide about the stock. How to trade pump and dumps? Even if you think that a pump and dump scheme is happening, there is still opportunity for profit to be had in trading the stock. Just remember that, given the dump portion of the scheme, trading can be extremely risky since the stock price is likely to end at or below where it started. However, since the price should rise during the pump phase, there is potential to profit by buying high and selling higher as long as you sell ahead of the crash. Another possibility is to short the stock since you expect the price to crash once the schemers dump it. However, be cautious when attempting to short since high demand for the stock may mean that your borrowed shares are called back in by your broker before the dump begins, in which case you would likely suffer a loss. Illegal pump and dump schemes can be extremely dangerous for investors who fail to recognize. Although it is difficult to be certain that a scheme is underway, a little research into the person or group promoting a stock and the company behind the stock itself can go a long way towards protecting yourself against inflated hype. In addition, for those who can recognize a pump and dump scheme is likely occurring and who are willing to take a significant risk, there is excellent potential for profit.